Pete Calhoun, historically low interest rates, what are the opportunities?
Well, the opportunities are if you've got a healthy deposit to maybe probably get into some property, certainly up around the Bathurst region, the Central West region, where properties haven't gone through the roof. Sydney, I'd be sort of, you'd want to be saving up a healthy deposit. But yes, look, interest rates do allow you to do certain things. Get involved in property, get involved in investing. The disappointing part is obviously if you're relying on the interest rates for your income, that hurts a bit. Well, not a bit, it hurts a lot. So we need to look at alternatives, and that's where you can, if you're at that retirement age, you can pop in and see me, and we can have a look at alternatives.
Housing is obviously a popular place to invest. What are your thoughts on negative gearing and people using that as a way of minimising tax?
Negative gearing, as the word suggests, means negative. You're going to make a loss. The idea is that you pay out more than you receive in, so obviously your taxable income goes down, and you pay less tax. You've still lost money.
Yeah.
The underlying asset goes up. It's fine. But if that doesn't happen, you're treading water for a long time or going backwards for a long time. So you need to be astute with what you buy. Like anything, it's when you purchase and how you purchase. If you buy well, you'll always go well. If you don't buy well, you'll struggle throughout.
Pete, how difficult is it to self-manage your super fund in this day and age with mining being so uncertain in the future, and that traditionally providing a healthy return on investment? Just how hard is it to get the balance right?
Well, I suppose the simple question there is I've been in financial planning for 26 years now. I know that might surprise you. I don't look that old, but
26 when you were 12, yeah.
26 years. And I've got adequate enough for money to, in my superannuation plan, to go and start a self-managed super fund, and I haven't bothered, okay? For reasons being, one, the trustee regulations that you were required to adhere to. You print out what the requirements for the trustees are and things like that. You'll go through all that paperwork. You just can't hand that off to somebody else. The other thing is when people talk to you about how well they go at investing, it's very interesting to know when they started and how they reacted when things don't go well or investments are having a hard time, whether they bite the bullet and then go to cash and then forget to go back into the investment. So emotion comes into it a bit, where people think they overestimate their ability to get a good return, and that only ever comes out when the fund goes south.
Yeah, and I guess that's, as well as the admin load, there is that load with the self-managed super fund of making the right investment calls at the right time. And unless you've got the time to actually devote to that, you probably are best leaving it to a panel of experts that are managing the superannuation fund.
Exactly right, Pete. The fund managers have been doing this for a long time. They have no emotion involved in the fact that they buy at a price, they sell at a price. There's no ifs or buts about it. That's what they've anticipated the price will go to. They'll take their profit, they'll get out of it. If they get some wrong, yes, they're not scared to say, we'll get out of that, we'll change, they'll have a look at what's changed in that company, why that company's losing money. They'll have a look at the prospects for it. They make a value decision. They don't make an emotional decision, right? So it's very important that I think that, professionals do manage your money. It comes at a cost. It's not a massive cost,
Pete Calhoun, great to have your time.
Thank you very much.
Thank you.